Happy day all. I'm Madhumitha from second year MCom. My self-seminar topic is risk return trade-off point. So in this seminar, we are going to see the concept about risk return trade-off point and what's the risk return trade-off point about and how it has an influence on the investment and how it affects the financial stability of the person. So let's get into the topic. What is risk? Risk involves uncertainty about the effects of an activity with respect to something that humans value, such as health, well being, wealth, property, or the environment, often focusing on the negative desirable consequences. So, the first thing which comes to our mind when we think about the risk is an uncertainty which leads to an financial or non financial loss. So, the risk is a concept which we try to avoid by not getting into the thing which has risk, and we try to reduce it by taking some precautionary measures, and we try to transfer it by taking some insurance. And finally, if the risk happens, we try to accept it. So this how the risk concept run in an any way of financial or non-financial thing. What is return? A return is the amount of money that an investor makes from their investment over some period of time. So, for example, if I invest rupees 30 lakhs in a mutual fund for a period of 30 years, at the end of the 30th year, if I get rupees 1 crore as my return, I would say the money of rupees 70 lakhs is my profit or return for my capital investment of rupees 30 lakhs over a time period of 30 years. So, this how the concept of return would work in any kind of investment portfolio. What is trade off? The trade off is about finding the right balance between the potential reward and the amount of risk you are willing to take. So, the trade off is a point where it balances the risk and the return in the same way. So, the higher the risk, the higher the return. The lower the risk, the lower the return. So, this how the concept of trade off point would work. What is risk return trade off point? The risk return trade off point is a fundamental concept in investing that describes the relationship between the potential return on an investment and the level of risk involved. Essentially, it suggests that the higher returns are generally associated with the higher risk and the lower returns are typically associated with the lower risk. Yes, for example, if we take the investments which has high risk will involve the higher return. For example, shares, mutual funds, bonds, etc. And for the lower risk, we can take the example of fixed deposits and any other kind of government scheme deposits. So this will have the lower risk and the lower return. So, the next one is how risk return trade off point helps to earn more return in investment. Here are some steps to follow. The first one is to understand your risk tolerance. The risk tolerance of a person varies from one person to another depending on their family background and their financial stability. And the second one is to diversify your portfolio. Instead of investing your fund in one kind of investment, you need to invest your fund in different kinds of investments. The third one is to adjust the proportion of risky assets. Yes, when it comes to investments, you like to invest both high risk and low risk investment. It will help you in any kind of financial crisis moment. And the fourth one is to take advantage of long term growth. Long term growth is an essential mantra in an investment. And the first one is to adjust the proportion of risky assets. By making all the steps, you will have an insight about investment and you might earn more profit. So, this is about how the risk return trade off point helps to earn more profit in an investment. To conclude, the risk return trade off point highlights the essential balance the investor must strike between the level of risk they are willing to take and the potential returns they are aimed to achieve. The optimal point on this trade off varies for each investor, ensuring a thoughtful approach to portfolio construction and investment strategy. So by following these kind of steps, it makes the investors to earn more profit and make their financial and investment history in a very profitable way. So thank you all for your valuable time. Thank you.